During our times, who do you think is the greatest investor and why?
I hate to be boring on this. I do think Buffett is the greatest investor. And the reason why I believe that is, this is a 50-odd year, it's a 60-year track record of compounding at 20+% with a very modest amount of leverage, in the form of principally insurance float. And I just don't think there's a record that compares. And I also think that what he does actually creates value for the world. I think George Soros is an incredible investor, but I think what he does as an investor creates no value for the world. No, I think what he does as a philanthropist, I think he creates a lot of value. So I think Buffett has the benefit of, I think Heinz will be a much better business by the time, as a result of Buffett's ownership. You look at what he did with Geico since he bought it. I think he's created enormous, he's bought businesses well, but not incredibly well as he's gotten to be quite large, but he's made those businesses much more valuable. And I think he's also created a lot of messaging that's affected the way people think about executive compensation and derivatives. So I think he's made an enormous contribution. So I think it's a combination of long-term, kind of longitudinally, and the accomplishments he's had. So I think he's the best, by far the best.
Given your relationship when you worked with 3G Capital and Burger King, what was your initial reaction when 3G teamed up with Berkshire Hathaway to buy Heinz in February of this year?
My initial reaction was they're going to make a lot of money.
Just from the fact that there are 15 top-line businesses that make over 100 million, or from selling those off, or more of...
No, look, the way an interesting thing to do would be on a student trip, I don't know if you can make it all the way to Miami, but if you were to go to the Burger King headquarters, and you get off on like the 8th floor, there's no reception desk. You get off the elevator, and you walk straight out, and the first desk, which is a desk you might see in a third-grade classroom, just a flat desk with 4 legs, you could probably buy it at Kmart or something, is the CEO. And then about 4 paces to his left is the CFO. And 4 paces to his right is the chief marketing officer. And literally the entire senior management team is in a completely open space, no offices. Behind his desk is a sheet of paper. It's got the 5 key things he needs to accomplish that year. It's got green, yellow, or red dots based on his relative progress. This is the CEO's progress. And each of the senior reports all around the office have their own metrics on things they need to achieve with commentary so that everyone can see them. The printers are all set automatically to print on both sides. You're not allowed to print color. They never allow presentations where the background is black and the letters are white because it consumes too much ink and an ink cartridge. All the executives fly coach. They share rooms at cheap hotels. If you think about that kind of culture compared to the typical big American corporation of private jets and really a lack of regard to expenses, they're just going to find, I think if I remember, the company did something like $2 billion of operating income and had something like $9 billion worth of SG&A. My guess is that $9 billion number becomes 7 in relative short order, and the $2 billion of operating income becomes $4 billion of operating income. And they bought the company with a lot of leverage. Even though it was a junk bond issue, I think they borrowed money at 4% interest. So I think the total capital structure was something like 50% debt, which was at 4%. And Buffett put up this 9% perpetual preferred stock. And then the equity was only about a third of the total capital structure. So when you buy a business like that with as much leverage as they did, and the leverage is long-term and on average very low cost and safe, the 9% is a big coupon. If they can't afford to pay it, there's no penalty for them paying it. It just accumulates. And you apply, a cost-driven restructuring of the company, you're going to double and triple the value of that equity over time. So I think they're going to make a fortune. And since I'm friends with them, they very nicely allowed me to invest in the deal.